Good afternoon, everyone. Thanks for joining us. Today, we have a presentation with Tantalus Systems, which trades on the Toronto Stock Exchange under the ticker GRID. With me today, I have CEO Peter Londa, who's going to talk to us a little bit about the recent acquisition and what Tantalus has in store for us this year. Before we get started, as always, this presentation will contain forward-looking statements. If you'd like to find out more about those, you can find them on the company's website on their presentation. And there will be a Q&A section, so feel free to input your questions at the bottom, or you can email them to me. With that out of the way, I'd like to introduce Peter Londa. Hey, Pete, how are you doing?
Deborah, I'm great. Thanks for having us.
Yeah, it's been a while, and you've closed an acquisition. You've had a recent update for the year, so lots to talk about today.
Yeah, it's been we've had a sort of strong closing to the year, notwithstanding some disruptions from Omicron and COVID-19. But we're really pleased to share the news over the last few weeks on our first acquisition as a public company, sort of some key milestones for 2021 and then some forward-looking guidance for 2022. So excited to share that update across the Adelaide universe. And it's all right, I can just flip through some slides.
Yeah, for sure. Why don't you start with a little bit of background on the company for anyone that's new and then just dive right in.
Great. First off, thank you all for joining the webinar today. My intent is to try to go through a fairly brief update on what we do and then really focus time and attention today on the recent acquisition that we announced 2 weeks ago and some of the milestones that we achieved in 2021 and our outlook for 2022. With that in mind, in terms of who we are and what we do, our purpose as an organization is to help build sustainable utilities for the future. Within that, our primary focus is developing and deploying technology with electric utilities, as well as what are referred to as multi-commodity utilities, meaning a utility that is responsible for not only delivering electricity, but also delivering water and or gas. And about 50% of our customer base today are multi-commodity utilities. The other 50% are just electric utilities. What we're doing is through our technology and our broader solution is really helping utilities improve their financial performance, improving their operational efficiencies that tie to asset management or workforce safety. We're helping utilities improve the impact that they have on the environment by reducing carbon emissions, by improving overall systems to make access of water, electricity, and or gas more equitable to their community. And within that, by helping them ultimately improve power quality, reliability, and customer service, we're helping their communities, the communities that these utilities serve today, by providing improved power that can lead to economic development to attract new businesses into their community. They can get more creative in terms of rate structures for different types of applications, and ultimately just make things more affordable for their community. And so that's really the purpose of our organization, is to help build sustainable utilities. In terms of sort of where we sit and the investment thesis around our business, we are very much focused and centered. So we think about the sustainable utilities of the future. We're very much focused on helping utilities modernize the grid, and within that, the distribution grid. And as you think about the electrification of everything, we'll talk momentarily about the impact of electric vehicles and the electrification of transportation in general. As you think about how we all are starting to consume more and more electricity, the current state of the distribution grid, the mechanism that delivers power to each of us, truly has to be modernized. And that's what our focus is in trying to help utilities become more sustainable. We are making direct investments, both organically through research and development, as well as through acquisitions, to increase the revenue contributions from software and services, which is now in excess of 35% of our overall revenue profile, in conjunction with making the recent acquisition that we've just closed. And we have successfully crossed over a big milestone for us of now deploying our technology to over 200 utilities. As we integrate the acquisition that we've just completed, a company called CONGRUITIVE, this number will grow. and the number of utilities and the types of utilities will expand. As we enter into 2022, notwithstanding what's unfolding in the capital markets today and the overhanging effect of increasing interest rates in both Canada and the United States, we have significant flexibility to manage our business as a team with the strongest balance sheet our company has ever had in our history. And so that allows us to ultimately execute on our model and execute on our plan without being subject to capital constraints in any capacity. In terms of the utilities, the customers that we support, and why we're successful in securing those utilities as longstanding customers of Tantalus, utilities are really witnessing a tipping point and an inflection point with respect to their infrastructure. If you think about what's unfolding, and I'm going to talk high level for a moment about the utility industry, because not a lot of folks really pay attention to the utility industry, or not a lot of folks really think about electricity until the power's out at our homes. What's unfolding for the utility is this increasing demand for power based on the electrification of everything, pretty much every industry. We're witnessing that really happen at warp speed as an increasing number of automobile manufacturers expand the number of electric vehicles that are available, not only for consumers, but also for municipalities and school districts and commercial and industrial entities that manage a fleet of vehicles. As adoption of electric vehicles unfolds, and we believe within our thesis and our strategic plan that will continue to increase over time. As electric vehicles are adopted, individuals, businesses, municipalities will all seek to power those vehicles at different times of the day, at different locations, right? And with different infrastructure, with the full expectation that their utility can provide the necessary power at the right location, at the right time, and frankly, at a competitive rate in order to charge our vehicles. Utilities are being asked to prepare for that onslaught of power, and simultaneously by politicians, by society and consumers, by regulators, to decarbonize their business and start to transition how they generate power or how they access and deliver power. And so from our perspective, this creates a tremendous and long-term opportunity for technology companies like Tantalus, whereby we need to help utilities modernize their grids to prepare for an increased amount of power that they have to deliver while simultaneously reducing their carbon footprint. It's not an easy thing to solve. And it truly is putting significant stress on the utilities that we rely on every day. The way in which we are helping utilities do that is by helping them transition from the legacy grid that we have all grown up and relied on, a one-way source of generation flowing into equipment and assets in a substation and down power lines to the point of where we consume our power. Well, as electric vehicles, as solar panels, as battery walls, as storage devices, as microgrids, all become more prolific and all get deployed at the edge of the network. Those resources not only consuming, but also generating power. And so for the first time in the industry, utilities have to prepare for a multi-directional flow of power, meaning distributed sources of power, generating power or making power available at the very edge of the grid and flowing that power back into and up to the grid. That is not something that utilities have prepared for, is not something existing infrastructure can truly support. And so the way we help utilities prepare for this multi-directional flow is by what we refer to as creating a digital network of devices, meaning we are digitizing every aspect of the distribution grid that utilities rely on to deliver power. The way in which we do that is with a very comprehensive technology solution. The solution includes a communications network that we build which is proprietary to the utility. And the reason why that's important is in today's environment, where cybersecurity threats are only increasing, utilities are very conscious of ultimately creating connectivity to various devices all the way down to our homes or buildings or industrial plants where we live and work, right? And having those devices susceptible to a cyber attack. And so we build a very secure and proprietary communications network to try to mitigate the risk of cybersecurity issues for a utility as they automate aspects of their operations. In order to do that, we design and we build infrastructure, communications infrastructure devices. And at the very end of that network is our edge computing module, which is this green circuit board, I'll use my mouse momentarily, that gets integrated into a variety of different devices, whether that's a meter, a switch to turn on and turn off an electric vehicle charging station, street lighting infrastructure, as examples. The intent is to get our devices and our network deployed at a utility, because once we get those devices deployed and in the ground, those devices are there for 12 to 15 years. And so it creates a very sticky relationship for us to generate revenue from utilities through the life of our deployment. The way in which we are generating revenue through the life of our deployment is by developing and delivering enterprise software applications that access data, and from that data, help utilities improve their efficiency by giving them direct command and control of every asset they rely on. From the data that we collect from these devices, that drives data analytics and AI-enabled capabilities to help the utilities proactively plan for circumstances, identify issues, and troubleshoot their system in advance of a power outage or in advance of a device failing and exploding and causing a fire. That's what we do. We've recently made an acquisition of a company called CONGRUITIVE that we announced about 2.5 weeks ago. It's a software business that is solely focused on helping utilities prepare and access information from electric vehicle charging infrastructure, from inverters that are deployed to support rooftop solar panels or battery walls, and from microgrid controllers. A lot of technical capabilities within that software, but the way we looked at the tool and how utilities are looking at the software tool and the importance of it is, as different manufacturers bring into the market electric vehicle charging infrastructure, or an increasing number of organizations focused on deploying rooftop solar, those devices all don't speak a common language. Some speak, as an example, German, some speak English, some speak Spanish, some speak Japanese. And because of that, the utility is being asked, right, to somehow communicate with and access data from all these different devices that are not operating on a standard protocol, a standard communications path. And so what CONGRUITIVE has done is they have figured out how to effectively translate the language that's being spoken by a variety of different endpoints, vehicle charging stations, inverters, and normalizing that into a standard that can come across the firewall for the utility and into mission critical systems that already exist. So what we've acquired is effectively the Google Translate tool for electric vehicles, rooftop solar panels, and battery walls. The company that we've acquired, while small, is at the forefront and a thought leader in this space, whereby they've actually been certified as the first company to comply with an emerging IEEE standard that is being adopted today across all utilities in the state of California, Illinois, and Pennsylvania. And we believe that more states will follow those first 3 states in requiring utilities to normalize communications and access of these different devices through an IEEE standard. That's what this organization has done. And they've been successful in getting that software deployed at 3 of the largest utilities in the United States, One is in the San Francisco Bay Area, an investor-owned utility called Pacific Gas and Electric. The second is in Southern California, an organization called Southern California Edison, SCE. And in Pennsylvania, the investor-owned utility supporting the city of Philadelphia, Pennsylvania Power and Light. It's those three utilities that not only provide scale and visibility to drive incremental revenue now for Tantalus, but also become the basis of references for other utilities that are trying to figure out this same problem. How this helps Tantalus. Our history and heritage in supporting now over 200 utilities has really been helping utilities automate assets all the way down to the meter, to the side of the home. What CONGRUITIVE allows us to do is, in partnership with utilities that are already relying on us and purchasing our system, software, and services, is now to go behind that meter, to go beyond the meter into the home or into the building, to access devices that sit behind the meter, the electric vehicle charging station, the inverters, the battery walls. From access, our target is to then provide utilities direct control in concert with their customers. And so it's the power of the software tool and our heritage, communications networking, edge computing, that truly allows us to accelerate the modernization of the utility and help them prepare for the adoption of electric vehicles, rooftop solar, and battery walls. I see a few questions, so I'm just going to wrap up on a few financial data points for you that we shared last week, and then more than happy to open up for questions, but a few data points. In 2021, our focus was very much getting public and strengthening our balance sheet. And with Adelaide capital support and a set of investment banks in our syndicate, we went public a little over a year ago. We just witnessed our 1-year anniversary of being a publicly traded company last week. We quickly uplisted from the TSX Venture Exchange, where we went public, to the big board, the TSX, which we did in May. Through both going public and graduating to the TSX, we ran 2 financings and ultimately accessed over 20 million Canadian dollars through those financings at a share price of $2.25, has allowed us to enter into 2022 with, we report US dollars. So we've entered into this calendar year with over 14 million US dollars on our balance sheet. And it's that balance sheet that allowed us to be able to execute on an acquisition without having to come back into the market to raise more money. In addition to the strength of our balance sheet, in terms of one of our biggest areas of focus is growing our user community, getting to as many utilities, having them lock into our technology and deploying it in the field, again, to create a multi-decade relationship and then driving revenue from those relationships. To that end, last year, notwithstanding disruptions from COVID-19 and the implications it had on actually being able to go visit utilities and travel to meet with them in person, we tied a record performance in terms of the number of utilities that we convinced to join our user community. We secured 25 new utilities last year. That's above, on average, the 20 utilities that we've secured each year for the last 8 years. That incremental increase in our user community to 25 utilities led to a record for us in terms of the growth rate on the amount of orders we secured out of our pipeline. And to that end, we witnessed our orders grow from 2020 to 2021 by 27.5% year over year. It's an indication of the momentum that we're seeing across our market segment and utilities to really accelerate and be motivated to start upgrading their grid in anticipation of the F-150 Lightning that will land in the next few months here in the US, as well as the increased number of vehicles that are going to be made available at the consumer and commercial and industrial level. We've entering this year with the strongest backlog that we have ever had in our company's history as well. We've gone into this calendar year with over $27 million USD of backlog. And it's that backlog that's allowing us to have confidence in the growth trajectory of our business this calendar year. And so to that end, we've shared publicly that we are pursuing and anticipate 20% growth in our revenue year over year based on where we sit with backlog in hand and the ability to continue to execute out of our pipeline. And so in summary, I'd say as we look back on what we accomplished last year, a lot of great milestones for us, is certainly relative to, I think, what we conveyed to the market in accessing capital and going public. And as we look forward into 2022, I think Tantalus sits at the right place at the right time to truly help the utility industry prepare for the modernization of the grid. Relative to where our stock is currently trading, we think it's an interesting and attractive entry point to bring new investors into our shareholding mix, and look forward to answering any questions and fielding any other questions that might come across, Deb.
Sure. I'm going to select one of my own questions to start, Pete. Under your 2022 momentum category, you talk about the robust stimulus funding. Can you talk a little bit more about that? I think the U.S. government's committed, $350 billion to helping utilities upgrade. What does that mean for you?
Sorry, I meant to cut you off.
Sure. No, just maybe you can talk a little bit more about that.
Yeah, so I was fast forwarding to a slide here in our appendix, and we certainly can make the slides available to anybody that's interested. But there are three big categories of funding that's become available through the United States government. And I'd say not from a political perspective, but the current administration in Washington, D.C., from my perspective, is challenging the utility industry to decarbonize, but also putting taxpayers' money where their mouths are here in the U.S. And so there are several $100 billion that have been earmarked to prepare for the electrification of transportation and help utilities get there. And so to that end, we are tracking, and we have actually a firm engaged in Washington, D.C., that is helping members of our user community, existing as well as prospective accounts in our pipeline, to actually file applications to access stimulus funding or government funding to invest in our technology. There are really three big buckets. There are still several $100 billion available at the state, city, county, and municipality level that are tied to resiliency and infrastructure, that were all tied to COVID-19. And so a significant portion of those dollars are actually and can be allocated to infrastructure investments. And we've demonstrated an ability of ensuring that our technology complies with those efforts. So we have a number of utilities that are going through their state process and dollars earmarked state by state, county by county, city by city, to actually pull some of those dollars to either start an investment with us or accelerate their deployments. The second area, the BRIC, is referred to as BRIC here in the United States. It's the Building Resiliency and Infrastructure Effort. It is a recurring amount of money that's being filtered to FEMA, which is the federal agency that ultimately is helping communities restore after extreme weather events. Unfortunately, we continue to witness horrendous storms. Mother Nature is still angry. And when those storms happen, massive outages, right? Large economic loss, unfortunately, in some circumstances, loss of life. We've witnessed our first utility actually access funding through FEMA, this BRIC program, to accelerate a deployment with us as an example. Last but not least, in November of last year, the Republicans and Democrats at least agreed on one thing, which tied to the Jobs Act and infrastructure investment. It's a 5-year program that is in excess of $1 trillion with over $175 billion earmarked to stuff that we do, helping utilities. That funding is not yet available. There's still negotiation on budgets and how it's going to get allocated, but it is earmarked. It is approved. It's legislated at this point. Our view is that $175 billion really starts to surface in the 2023 to 2025 timeframe. So over the next 2 to 3 years. But it's, massive funding available to the utilities we support today. And to that end, not to be redundant, but we've got about $10 million of applications submitted through the first two programs, COVID-19 and BRIC, right now with a number of utilities to try to accelerate their deployments. Hope I answered your question, Deb.
Yeah, no, that's great. Thank you. I know everyone's sick of talking about COVID-19, but you've got a slide up referencing it. So can you talk a little bit about how the pandemic's impacted you and what you're looking forward to in terms of 2022, assuming that Omicron's the last big wave?
Yeah, well, it is a phenomenon. I guess at some point, hopefully, I live to get older and can look back on it. And the way my grandfather's generation looked back on Spanish flu a little bit. But what we witnessed is in 2021, COVID-19 still impacted some decision making of utilities, delaying decisions or extending the time when city councils got together to approve investments in our technology. As we got to the end of the year in the United States, Omicron showed up in a couple of different regions. Unfortunately, it hit a region for one of our primary meter partners. We don't build meters, but our edge computing gets integrated into electric meters. And so we witnessed at the very end of the year quantifiable dollars of our devices integrated into meters, in boxes, prepared for shipment in December. And unfortunately, our meter partner's factory really shut down because of Omicron. So we actually witnessed hard revenue that was fully scheduled to be shipped and invoiced at the end of, in sort of the last 2-3 weeks of December, all get pushed into 2022. So that impacted some of our revenue profile numbers for 2021, not lost revenue, just delayed. What we've also seen is COVID-19, sort of a separate issue, but they're connected. COVID-19 has also impacted our supply chain. As I'd mentioned, it impacted very specifically our meter partner in terms of really impacting staff at their factory to get devices integrated, our devices integrated into their meters and shipped. But we also saw that in the Philippines and Southeast Asia, where a lot of our products are built with a contract manufacturer with their factories impacted by COVID-19. Couple that with supply chain constraints of semiconductors and other electronic components, and a number of macro events there to navigate through, but I think we've done that successfully. As we look into 2022, I hope you're right that the Omicron wave is at least the last one that is disruptive. My instinct is there'll be incremental ones moving forward, but hopefully less impactful each time. With that said, we are seeing pent-up demand for engagement. And so in 3 weeks, we are attending our first conference, industry trade show in 2 years. It's with the National Rural Electric Cooperative Association in the United States that represents all electric cooperatives. They have a record number of registrations 3 weeks in advance of the event. We've seen the American Public Power Association actually just execute their first CEO conference this week, record attendance. And so we're starting to see trade shows pick back up, which is a great way for us to get in front of utilities, and certainly going to enable our sales team and our executive staff to get back into the world and traveling again to visit and educate. So that's how I think we should see some pent up demand here, I think, as a result of what's unfolded over the last 2 years.
Okay. And when looking at the backlog, which I believe is a record backlog for the company, how much of that do you think is from COVID delays in Q4?
Yeah, so we've referenced that in our press release. It's about $2.5 to $3 million, Deb, that's slid from last year, either because of COVID or supply chain into this year. And so, but for those events, right, last year would have been well in excess of consensus. This year, though, it just translates into improved visibility and that much more incremental year over year growth. So it's about on the aggregate almost 8 to 10% of our revenue profile last year impacted and sliding into 2022.
And how much of that backlog do you think that you can convert this year?
So yeah, to avoid confusion, the $27 million that I referenced is all expected to be shipped and scheduled this calendar year. It is a subset of the aggregate backlog that we have for the company. We just haven't publicly disclosed the larger number that we have into the out years. But of our aggregate backlog, 27 million is at this point scheduled and or expected to be shipped this calendar year.
Okay. And are you experiencing any impact from inflationary pressures? And how do you plan to mitigate the risk of rising inflation in the US?
Yeah, so we reported and we shared, sort of still solid gross margin through 2021. We did implement our first price increase in Q3 of last year. It's the first time we've done that to our customer base in years. We have signaled to our customers that we may be at a position where we have to do another pricing increase relative to the pricing pressure we're seeing through our supply chain. And I think utilities are prepared for that. So a lot of it ties to communication and giving them ample time to prepare accordingly. Where we're also seeing some inflationary pressure, it ties to wages and employees. That may impact our ability to hire quickly and efficiently the way we have historically, as certain positions that we're in the market for are just some of the asks are increasing in terms of compensation that we historically would pay or within the matrix of what we would pay. And so, I think at some point that starts to normalize, but the bulk of it will come in our supply chain. And I think we're pretty well positioned. And again, we delivered over, I think, just over 45% in terms of gross margin last year. As we continue to increase software and services as a percentage of our revenue, we actually are anticipating our gross margin to increase into the upper 40s this year, notwithstanding incremental pricing pressure in the supply chain, just because of the nature of software and services. Gotcha. That's how we're trying to shelter and hedge ourselves a little bit.
Makes sense. So going back to the Congruitive acquisition, the 30 clients of Congruitive, are some of them already existing clients of Tantalus? How much overlap is there?
Yeah, so there actually, there's one that is somewhat of an overlap. And it's a utility in Colorado that's been a customer of ours for years and one of the more forward-thinking utilities we interact with. They're based in right where the Purgatory ski resort is, on sort of the other side of the valley from Telluride in that portion of Colorado. Congruitive is not selling directly to that utility, but what they're doing is they're embedding their technology, their software, onto an organization called Nuvve, Nuvve. Nuvve is in the business of rolling out and managing fleet electric vehicle charging infrastructure. So school buses, sanitation trucks, as an example. The Congruitive software is embedded on devices that Nuvve is selling to the same utility in Colorado. It's a utility the utility is called La Plata. And so that becomes the first joint customer where our comprehensive smart grid platform is embedded and where the Congruitive software is starting to show up as that utility prepares for fleet management of electric vehicles. So that's the first. The nice thing is that creates a lot of revenue synergy and opportunity for cross-selling. As we integrate their software into our system, we'll be very aggressive in bringing that tool and capability into our growing user community. Similarly, as Congruitive is supporting an increasing number of utilities, particularly the investor-owned utilities, it gives us an opportunity to access a set of customers that we have historically not been successful at or pursued. And so I think that will drive revenue synergy as we think about 2023 and 2024 for sure.
It provides a nice case study for you as well.
Yep, the La Plata one will be great in terms of how smart grid and EV infrastructure all tie together for a utility. I think it'll actually be one of the first examples of that in the US, if not North America.
Cool. So are you looking at other acquisitions? Will that remain a part of your strategy going forward?
Yeah, I think that we're part of the reason why we went public and was to strengthen the balance sheet and create a security in our common stock to use as consideration, which is exactly what we did in the Congruitive acquisition, using some cash, using our stock and absorbing some of their debt. As we think about scaling, M&A, I think, is a very strategic way for us to bolt on tools, software applications, or other technology that really fit the needs or solve problems for the increasing number of utilities we support. With that said, I'm mindful of what's happening today in the capital markets. I'm mindful of where our share price is. And so I think the cost of equity and the cost of capital is increasing in today's environment. With that said, we're not managing the share price. We're managing to build a good company. And as we identify opportunities that are strategic, that we think will be accretive for our shareholders and that really bolster and tie into the strategy of this organization, we'll look to execute incremental M&A.
Makes sense. So I don't see any other questions from the audience, and I think you've answered the ones that I had, Pete. Maybe you can just talk to us a little bit about, what goals you've set for 2022. Maybe you could list 3 to 5 things that the market should be watching for.
Yeah. So, Deb, I think first and foremost, from a financial perspective, we tried to walk before we start to jog. And so, going into this year, we've provided guidance for our first time. And so, first and foremost is our ability to execute on the guidance that we've provided. It's based on our view of where supply chain issues are and potential disruptions from COVID-19. But I think we're in a very good position to control what we can control and meet that number. So that's one aspect of it. It'll tie to financial performance. The second is, I think, just increased growth of our user community. Right? Our goal is it's really a land and expand model for our shareholders, meaning land as many utilities as quickly as possible to grow our user community, and then expand within those relationships over a decade to drive revenue. And so, I think the second big milestone will be continuing to exceed the average number of utilities we secure in a year over the last 8 years. And so we're very much focused on trying to secure more than 20 utilities this year. Again, incremental demonstration of our technology, our value, and our ability to gain market share. Third is, I think, the integration of CONGRUITIVE. From a technical perspective, and one thing to look at and look forward to is we are working hard to bring forward our next generation gateway at a premise. It ties to utilities that are deploying fiber all the way to the edge of their grid to really build a nanosecond type response system for self-healing and simultaneously deliver broadband access. What we're looking to do is to get CONGRUITIVE software embedded as an application on that gateway and deliver it to utilities to truly gain not only situational awareness about what's happening at the premise, the home, the building, the industrial plant, but more importantly, gaining command and control of assets behind the meter. And so that's a third area of focus is from a technical perspective is really getting that gateway deployed with hopefully CIQ integrated onto it to provide that more granular control of assets behind the meter. Those are 3 that I'd highlight.
Okay, well, I think that we can wrap it up there then. Pete, is there anything you wanted to talk about today that you didn't get a chance to?
No, I just saw a question pop up. So if it's okay if I address that one before I summarize. Sure. Okay, so I just saw a question come in around concern on discovery funds, liquidation plans. Fundamentally, the answer is no. And we've gotten this. It's a not to be dismissive of it, but we've seen quite a bit this notion of concern around the lockup of Tantalus. On the one hand, investors, I think, were shielded a little bit by that lockup. And now that's the inverse is the lockup's expired. And so what happens? Discovery Fund started investing in our company in 1999. They do have a plan to liquidate their entire, not just Tantalus, but all holdings. They have an administrator who is directly engaged at this point with Deb, your team at Adelaide. And they're not going to be disruptive, and nor are they going to be, I think, reckless. What their plans from what they've shared with us is to either systematically find opportunities for bulk trades or block trades of making room for larger investors that want to take a material position in this company and scale their holdings. And to the extent that that's not successful, then over the course of this year, they'll look to potentially distribute shares to their LPs. And so to that extent, it would mean an increased number of potential retail or high net worth individuals that we've got to try to track and cater to. But, I think as we continue to execute, as we identify investors that are looking to move into our stock, especially given where volume and liquidity is today, it actually creates an opportunity for us to make room for new investors that are looking to put in several $100,000 or buy several 100,000 shares at a time in one trade. And so from my perspective, it actually creates opportunity. It doesn't create challenge. And so I just wrap up, Deb. First off, thanks again for having us. And for those of you that have joined the webinar today, I appreciate the continued interest or allocating time to learn about our company. In my mind, we are a unique investment proposition on the TSX. We are truly a pure play that is focused on the modernization of the grid. And from an investor perspective, if you are building a thesis around electric vehicles or a belief around a decarbonization of our society, right, then Tantalus should fit squarely into that thesis. Because at the other end of those electric vehicles or the integration of these new technologies to decarbonize society is an entire utility industry that cannot be ignored and that has to be in a position to embrace those tools. Because if they're not, our society really comes crashing down with power outages. Vehicles don't get charged without power. That power has to come from somewhere. The vast majority of it's coming from a utility. And so if you believe in this notion of decarbonating our society and doing that through vehicles and other new forms of generation, then Tantalus should really be on your radar as the technology company that is partnering utilities to help them prepare. And I think as we continue to build awareness, Deb, and work towards building additional and broadening our shareholder base, I think we'll cater very well to investors that take a long-term view of trying to find a technology company that can solve that problem. And I think our success and track record demonstrates our ability to do it. So looking forward to continuing on our path. And again, I really appreciate the time and attention today in the webinar.
Well, I think that was a really good summary of the value proposition for Tantalus. It still boggles my mind why we don't seem to be getting the right traction with the right groups. I think it's not just one step of needing batteries for EVs. It's like thinking down the road of like, where are these going to get charged? And maybe it's just one step too far for a lot of investors, but for me, I think it makes perfect sense. And we've seen some of these catastrophic storms and events that have cut power and caused like severe damage and loss of life. And I think, those trends will continue, unfortunately.
Unfortunately, you're right. I try to keep things simple, and notwithstanding the whooping from the women's Canadian team on my U.S. women's team last night in hockey in the Olympics, but I try to keep things simple with sports analogies. And, Gretzky made his name and one of the greatest of all time by thinking through where the puck was going, not where it is. We're focused on where the puck's going. And I think the notion of EVs and batteries and minerals that tie to that, the puck's going to the utility industry at some point, and that's where we're focused. So with that, yeah, it's a real challenge, and we'll look forward to tackling it on behalf of our employees, our customers, and our shareholders. So again,
it's great to hear one person's watching the Olympics, Pete.
I'm trying to.
Anyway, thanks so much for your time. Anyone that's watching this either live or are on a replay that has any questions, feel free to reach out and I'll get those answered for you. And yeah, have a great afternoon.
Good to see you. Thanks so much.